Bismillah ar-Rahman ar-Rahim wa salatu wa salam ala Rasul al-Kareem. Assalamu alaikum and welcome to Takaful online course. And to this session is a continuation of the discussions of the popular terms used by the Takaful industry. So we are at the Takaful, which is the item number 28. So Takaful is basically another industry. So we have the Takaful industry, then we have the Takaful industry, and they are together in the Takaful industry in overall. So basically Takaful deals with individuals and companies. These are the members of the risk fund. These are the participants subscribe to the Takaful operators to manage their interests. Now Takaful, the members are the Takaful operators. They are not any other members, but their participants are the Takaful operators themselves. So you can see Takaful, their participant is the Takaful operators. The Takaful operators, their members are individuals and companies and corporations. So that's how is the structures of the Takaful, meaning it has a bigger scale. Their coverage and their scope of risk is much bigger than the Takaful. The item number 29 is the word riba, which is interest. Riba, as you know, one of the prohibitions of Sharia as well, in addition to uncertainty, which is the gharar, in addition to the qimar and the maysir and other prohibitions that has been mentioned. And interest, we have discussed this also in the context of qard or loan. If there is, of course, riba means increase, and here we are talking about the increase of the amount in addition to the principal. And riba is divided into two, of course, riba al-buyu' and riba al-duyun. So riba al-duyun is more related to the loans, to the debts. It's a kind of an increase of the amount imposed on the borrower for the interest or of the lender. So basically the lender will generate additional profit by providing its loan to the borrower, and these increments, these additions, this benefit generated through the loan by the lender is not allowed, and it is regarded as riba, which is prohibited. As we mentioned before, qard is used as a means to help and assist, but cannot be used as a means to generate profit and income. And of course, in the banking system, this is which represents a core, basically a contract in the conventional banking to provide loans to the many borrowers and generate as a result of that interest or income in the form of interest. And we have also another type of riba, but it's not popular because it's related to the commodities like like gold and silver, wheat, salt, and dates, and those are basically also subject to some restrict rule by Sharia, but it is not really very strong in the area of Takaful or banking because they are more related to a specific commodity. But of course, when we talk about involvements of the bank in buying and selling commodities, so those rules will be applicable. And if they are not observed, basically the institutions may fall into prohibitions under the concept of what's so-called riba al-fadl. We may come back to this with the specific discussions, as there are a lot of details and specific Sharia requirements to ensure that transaction is Sharia compliance and avoid potential shubha that may lead to what's so-called riba al-fadl. The following items, which is the item number 30, we call it rider. Rider, basically it is an attachment to the original certificate that's modifying the what's so-called its conditions by expanding the benefit. So you have the main policy and you have the main coverage, but sometimes the Takaful operators, in order to expand the benefits and cover additional benefit, what they will do, they will attach some additionals product called riders to expand the benefits. So when you have additional riders, so maybe the contributions may increase because the benefit would expand. But sometimes those riders are provided as options. If you want to take it, fine. If you don't want to take it, so you can drop it. The item 31 is the sadaqah. Sadaqah is a kind of a charitable donations encouraged by Islam. The item 32 is Sharia. The word Sharia, of course, is a kind of set of rules and commands provided by the lawgiver to the human being related to their actions, deeds, related to day-to-day life that govern their entire life, which has an implications in this world and the hereafter. So in this Sharia, you have the what's so called the theology, which govern the rules, or which govern the provide informations and knowledge about the lawgiver, the prophets, the hereafter, and so on and so forth. It is a kind of informations beyond the capacity of the intellect, and it is called aqidah, it's called iman, it's called theology. This is all the first component of Sharia. The second one is basically the law, which has a legal connotations, the law related to the rules that govern the relationship between basically God and a human being, and the section of ibadat, and govern the rules of human beings among themselves, and the sections of muamalat. So it is a form of commands and prohibitions that govern the entire lives of a human being. And the third one is basically the component of ethics, which is a rule of conduct. So as you can see, Sharia is a combination of faiths, law, and rule of conducts, which govern the actions of a human being in this world and has an implications in the hereafter. So this is on the Sharia. Sharia board basically is a form of committee, which is the item number 33. It's a form of committee. Sharia board is part of the Sharia governance within the Islamic financial institutions. Is a combination of a group of scholars, qualified scholars, who basically have the mandate to provide guidance to the Islamic financial institutions, provide resolutions to the financial institutions, and in those products, facilities, services, legal documentations, and all whatever related to the Islamic finance that's offered in the market, meaning that the products or services, before it is offered to the market, before even it is submitted to the central bank, this Sharia board will have the responsibility to review, check, examine those products and services, and make sure they are in compliance with the Sharia in terms of their structures, in terms of their flow of transactions, in terms of the terms and the conditions, in terms of the legal documentations, and other related aspects, which include sometimes flyers, marketing, pictures, telemarketing, and so on and so forth. Why? Because responsibility of the Sharia compliance, when it comes to the Islamic financial institutions, is the responsibility of this Sharia board, which is a group of Sharia scholars who are regarded as an independent body that basically provide guidance and directions and endorse the Sharia compliance of the product and services offered by the Islamic financial institutions. And according to the IOFI, every financial institution should have 3 members. And in the context of Malaysia, the requirements that Islamic financial institution should have 5 members that basically have this kind of responsibility. The item number 34 is the Sharia advisor. Sharia advisor is basically an independent Sharia scholars. Basically 1, 2, 3, 4, 5 Sharia advisors become a Sharia board committee. But one single Sharia scholars, normally we call him a Sharia advisor. Sharia advisor is an independent Sharia learner scholars because sometimes a business may require only one Sharia advisor, doesn't require a committee. Like for example, some of the product in the Islamic capital market, they don't require a committee, but one Sharia advisor can do the job. So, and if in case of 1, 2, 3, 4 Sharia advisors, so we become Sharia committee or become a Sharia board that we have mentioned it. And one single Sharia scholars, we call him a Sharia advisor. The item number 35 is basically, we call it ta'wid. The ta'wid is a kind of compensations for potential losses, whatever it is. The compensation, ta'wid compensations may occur, and as a result of that, so basically the person will be compensated. And ta'wid, normally it comes with gharama in the terminology of some terminology used in Islamic banking as well, or Islamic finance. And in the context of Malaysia, we have what's so called late payment charges, or sometimes in other places we call it penalty. So these late payment charges consist of ta'wid, which is a compensation, and gharama, penalty. So basically, gharama or ta'wid is a kind of compensations to your losses, but penalty the ta'wid is a kind of a compensations, and the gharama is a form of penalty. And both of them combine in the context of Islamic banking. In Malaysia, we call them late payment charges, and there is a guideline of Bank Negara on this. The last point in this session, which is the item 36, it is tabarru. Tabarru is a kind of donations. It's a kind of voluntary contributions for the purpose of building the funds to create a kind of mutual help, mutual assistance among the members. And this is one of the very important contracts. Why? Because the entire Takaful industry is built upon the tabarru. The entire Islamic finance, the entire Takaful industry is built upon tabarru, which is a form of donation, and it is a form of a voluntary contract or tabarru contract versus the exchange contract, which is more related to Islamic banking. So Islamic banking is built upon exchange contract, but we may see sometimes tabarru contract, but in the Takaful, the main foundations and the core business driver, or the core contract driver in the Takaful industry is the tabarru, which is a form of donations contributed by the member to build the risk fund and to build the Takaful business model. But it may involve other contracts as well, such as wakala, mudaraba, and so on and so forth. This is some of the, I guess, importance terms used in Takaful. We stop here and we carry on the remaining item in the coming session. With that, thank you very much, and assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.